All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick update here. We last looked at the stock about a month ago. However, we had some news hit the tape. As you see, stock taking a hit today. Name of the company we're talking about, Lithium Americas Corporation, ticker symbol LAC, listed here on the New York Stock Exchange. Stock right now 468, down almost 2 full points, about 29 and a third% here on the day. And basically, this is something that, again, I know we may have not talked about it. However, we've spoken about a lot of these longer term plays that may not really materialize, in my opinion, into profits for several years down the road. And we always say that, in my opinion, we have to deal with the short term volatility so that we can hopefully eventually run into some long term growth. And I think what we're seeing here is just the fact that I think, in my opinion, the company had to do this offering to raise this couple of hundred million to complete around that $2.9 billion total raise that they said was going to be now the new updated cost to complete the construction over there at Thacker Pass. So I understand if you got in recently at like 6 and now the stock's sub 5, I can appreciate the fact that you're upset. However, again, in my opinion, they state that construction isn't looking to be completed until like 2027, right? So technically, we have a couple of years before this construction is completed. And when we're nearing the completion of construction, then maybe you may start to see more new volume and more momentum coming into the stock, and it could potentially pump it up even before they start mining, because everyone's going to be anticipating that the mining is coming soon. You understand? But in my opinion, basically what they did was they offered the shares at $5, right? And the stock was beaten up, came all the way down to new lows here, 381, then went on a nice tear of about 100% move. And then boom, we have the offering coming out. But stock was up here at 7, holding the sixes, and now they made an offer. I believe it was 55 million at $5, equating to 275 million. I just want to double check. Expected to close April 22nd. Yeah, price is 275 million, public offering of 55 million shares at $5 each. Now, obviously, we've seen anytime companies do new offerings, right? We've seen this with stocks like SoundHound recently. Anytime these companies do new offerings, they're technically adding shares to the market. And obviously, if they price them even lower than where the stock currently was, the stock usually, in my opinion, we notice the stock drops down to around that price of the offering, because if they're offering new shares at around this price, then a lot of people may kind of make the assumption that, they probably feel that this is the current fair value. So we went from that 6.5 level down to 5, sub 5, basically where the offering was. But in my opinion, it seemed like it was necessary. And again, I know if you bought recently, you're waking up today, you're seeing the stock down 29, 30%. So I understand you're a little ticked off right now. But in my opinion, I do think it was necessary, because if we come back, people are still bullish on it though, right? Let's mention that as well. This is what I'm saying. I feel like everyone knows they can't completely bash the current situation, because they see the potential growth that is going to potentially be coming a couple of years down the road. So that's why, even if they bring it back down to sub 4 and it hangs out, between like 3.5 and 4 for a little bit, in my opinion, it really shouldn't get completely smacked up, because I feel like anytime there is a big dip, we do have like this big little relief rally bounce taking place. And again, I'm sure a lot of people wondering how the hell could they bring it down this low. It's sub $4, right? After the spin-off, it came out at 10, I believe. And now we're down here at sub 4. And then boom, just within, 5, 6 weeks, the stock rallies 100%. And in my opinion, if they didn't announce this offering, you might have seen a pullback to like here, the low sixes, try to bounce off of the 20-day moving average here, but it probably would have kind of maintained itself. But overall, it seemed like they needed to do this. But as you see here, just quick updates here, because these came out about a week or so after we did the last update, which I believe was like March 14th, 15th maybe. It was on the announcement of that loan we did the update. But as you see here, LA LAC raised to sector outperform from sector perform by Scotiabank. Cut to sector perform from outperform. Raised to sector perform. Oh, okay. Wow, that threw me off for a minute. Okay, so they changed their mind, I guess, within a couple of days. But as you see here, even JP Morgan, right, raised his price target. Now, again, technically, they didn't start mining yet. It's still going to take a couple of years. JP Morgan raised his price target from 5.5 to 7. And in my opinion, the reason why I feel like this analyst saw that a price target increase was justified is because, again, there is long-term growth. There is a lot of long-term potential. Again, they're slating that they're going to be the largest lithium producer in North America once they complete this construction a couple of years down the road and actually start mining. So again, they see the long-term value there. But also, more importantly, in my opinion, I think it was the loan from the DOE that just absolutely 110% completely, excuse me, too much coffee, completely solidified this company in the space as not only the main player, but also potentially showing us that it's an urgency play as well. See, that's the way I'm personally looking at it. And I know I have some people in the comments who say, oh, you really shouldn't, connect politics with stocks and whatnot. However, we basically are all connected geopolitically. And we've seen, again, even, when the wars started to break out in the Middle East, obviously our markets are affected. So you do have to kind of pay attention to politics as well, in my opinion. But it doesn't always, guarantee your outcome. But the point I'm trying to make is, it seems as though North America doesn't want to be completely dependent on outside foreign entities to get its lithium. And the fact that the DOE pushed through $2.3 billion, I believe it was, $2.3 billion loan to LAC for them to start completing and doing this construction so that they can be up and running a couple of years down the road, I think it speaks volumes, in my opinion. And that's why I think someone like JP Morgan has come out and said something like a price target raise from 5.5 to 7, because this is why, if in my opinion, if the DOE sees value here, then chances are there's value here. And this is why I'm saying, again, not to get completely political, but I feel like we may potentially go down the road of serious urgency in the lithium sector. And in my opinion, what you don't want to do is just kind of sit on your hands and do nothing, and then a couple of years down the road, potentially find yourself between a rock and a hard place. And then if you do happen to need your own domestic lithium, you would at that point have to first start construction, which would take years to potentially get your own domestic lithium. You understand what I'm saying? So this is why I feel like they wanted to push this through now, because they feel maybe inside of the next 5 to 10 years, the lithium market could potentially get thrown out of whack with any geopolitical issues, and they just kind of want to solidify and secure a domestic source here in North America. So that's why I think the Department of Energy kind of pushed through this $2.3 billion loan here. And in my opinion, it does make sense. But again, that's just me. It's just my opinion. But about $2.25 billion loan. But they speak about, where is the total cost? Estimated total capital cost for phase 1 construction has been revised to $2.93 billion. Updated quantities, execution planning. Okay. So we had $2.25 billion from, call 2.3 billion, I guess. 2.3 billion from Department of Energy, right? We got GM throwing a couple of $100 million. So now we're at what, 2.6 billion and change. And the company announced today $275 million offering, which would bring us right around that 2.9 billion and change mark. So that's why, again, I understand in the immediate short term, this sucks. The stock took a big hit. It wasn't what you wanted to wake up to. I can appreciate that. However, in the overall grand scheme of things, in my opinion, it might have been a necessity. Might have been a necessity. But again, I just want to reiterate the fact that they're supposedly going to be the largest lithium producer in North America. They're saying that, again, construction not completed until 2027. Mechanical completion, Thacker Pass Phase 1 targeted for 2027 following a 3-year construction period, right, which we just got funding for, with full capacity production targeted for 2028. So this is a situation where, in my opinion, I obviously, in my opinion, see long-term growth a couple of years down the road. So if this is a situation where you're adding to the position every couple of weeks or every couple of months, in my opinion, understandable. It makes sense. We have these big dips, these big sell-offs, right? So if you want to strike while the iron's hot, get yourself a little bit of a lower cost basis, in my opinion, completely understandable. But again, just want to remind you guys, in my opinion, you have to deal with this short-term volatility to potentially see this long-term growth. So if everything goes according to plan, in my opinion, a couple of years down the road, construction's completed, they actually start mining, we could easily be looking at, like a 17, 18, 20 plus dollar stock down the road. No problem, in my opinion, because that would really only be a valuation of like a couple of $1 billion. If we 3x this to $20, again, we're going a little over $2 billion. So that's not that drastic, in my opinion. But in its current form, a couple of $1 billion market cap valuation, in my opinion, is overvaluing the situation. So that's why I feel like there's value here, but in the moment, there's not that much value yet, because we technically haven't done anything. So the main point I'm trying to make is, again, not really trying to speak too positively or too negatively about this situation, just calling it like I see it. But more importantly, in my opinion, we do technically still have a couple of years before construction is completed and mining actually begins. So if you wanted to maybe keep this as a small position that you add to over the months, in my opinion, I would understand that. However, again, on the flip side, we're seeing that there are a lot of other companies that are rebounding nicely off of this sell-off. For instance, like PM, they brought down to sub 88, I believe. Now, just within a couple of days, it's back up to 91. I always say, in my opinion, PM, Philip Morris, again, that's a tobacco company. In my opinion, this is a defensive stock. They pay a very nice, healthy dividend, yielding about 5% right now and change. But it's resilient, right? It's defensive. We speak about this. Defensive means that really, whether the economy is up, down, or sideways, this business is going to continue to do its business and potentially even grow its business, even during hard, rough economic times. So that's why, as the economy does begin to get, quote unquote, more rough for the average person, a lot of money starts flowing into these defensive stocks like alcohol, tobacco, and we have even DraftKings has been holding up well. I mentioned this many months ago. As the economy gets rough, people will look to enjoy themselves a little bit more and try to indulge in like the immediate short-term little positives that they can. They're little stress relievers and whatnot. So that's why, again, they'll go out, they'll buy an extra bottle, they'll have a couple of drinks, or they'll, do some gambling, try to make a couple of bucks. Or obviously, the more you're stressed out, the more you may smoke. So tobacco companies, this is why I speak about some of these situations. But my original point is that there is obviously other money to be made, in my opinion, over the next couple of years. So that's why I wouldn't necessarily say that building a position in LAC would be a bad thing. However, right now in its current form, I wouldn't personally have 30, 50, 70% of my capital in this situation. Because chances are, we've looked at a lot of decent stocks, in my opinion, on this channel. So chances are, you could probably spread out that capital to a bunch of those names that we looked at, that in my opinion look pretty decent and solid in the fundamentals, and And probably over the next year or so, you can probably make a decent return off of those situations while, in my opinion, slowly adding to your LAC position and waiting for days like today where you can scoop up shares. Oh, it was just at 7. Now I can scoop up some shares here below 5. Right? Maybe you give it another month or two, you turn around. Oh, wow, they're keeping it down here. It's at 390. It's almost near the 52-week lows. All right, I'll take a couple of bucks. I'll add to the position as well. I'll lower the cost basis a little bit. So that's why I always say, in my opinion, much, much more advantageous, really, unless there's big, big news coming, or we're talking about like a big earnings play or something. Usually, for the most part, in my opinion, it is much, much more advantageous to slowly piece your way into a situation and build a position over time. But long term, personally, I do still like LAC. I do think it's going to be big, but it's just going to take a couple of years. If we look at the RSI here we're on the daily, right? Yep. On the daily, we can see RSI down here, 31.6. Technically not at that benchmark, and we have broken sub 30 at points. Again, that was leading to our 52-week low, 381. So in my opinion, we could potentially continue to sell off after this news, and we could maybe see low 4s and potentially even high 3s. We may potentially retest that 52-week low that we saw back in February, but we know that the stock does move for the most part with lithium prices. So depending on where lithium prices go, and of course depending on how rough the markets overall become over the next maybe couple of months, this is why I'm saying, in my opinion, the sell-off could potentially continue, but I don't think personally it's going to get completely decimated. But the sell-off could continue, is my point. The MACD was kind of slipping downward, and now of course we had this news, so it just kind of chunked straight down. If we switch over weekly, we can see RSI sitting here now, touch below 38, was basically middle of the road, bouncing off of that sub 30 mark. But again, now we could potentially keep pulling down and selling off back to that 30, sub 30 benchmark, which could potentially lead to about a point sell off here. So as you see, we have the bottom Bollinger Band on the weekly, 366. But if we also check our pivot points, on the weekly, next support level 277. In my opinion, that would really be the low of the lows. So we would have to have a situation where people kind of forget about it. Markets begin to sell off maybe over the next couple of months. A lot of people may just want to jump ship, preserve the capital that they have. So in my opinion, it would have to be a unique situation for us to see something like a 277. But of course, anything can happen. We know this. But here on the daily, you can see, look at this next support level, 365. Which is why I'm saying now after this offering, we could potentially see it kind of staying down and continuing to get beaten up, potentially dropping into the low 4s in my opinion. But again, the markets did really go on a tear for about 6 months straight. And again, it was based off the speculation that inflation was quote unquote cooling, which we're kind of seeing it's really not. And of course, everyone's kind of hoping for these rate cuts, which unfortunately we haven't received. So this is why I'm saying, again, not to put any negativity out there. Of course, you guys know I want every stock to run to the moon. I hope everyone watching makes $1 million. But to come back to reality for a minute, if we had a 6-month rally off of, in my opinion, what may now be viewed as false pretenses, you have to understand and appreciate the fact that we can just start to give back these gains over the next couple of months. And in my opinion, it would be completely justified. So if these markets all of a sudden, even if positive economic data comes out, if these markets all of a sudden just start dropping, like 0.7%, 1%, 1.3% across the board for the next 1, 2, 3 straight months, believe it or not, in my opinion, it would be justified because we just went on a massive run really for kind of no reason. And I understand some people are going to say, well, a lot of companies are reporting stronger. I get that. But I'm sure you can appreciate my point as well. So that's why I'm saying with a situation like LAC, again, we always speak about current value and, of course, any future value that a company could see. But also, more importantly, in my opinion, I do think it's all about urgency. And right now, in this current situation, Could they completely beat it up and bring it down to $2? Yeah, it's possible. Chances are, in my opinion, it's not going to happen. Steam friend, my apologies, guys. I always forget to sign off. But, see what I mean? No, I forgot what I was saying. Yes, urgency. So we could, of course, continue to beat it up, and it could possibly go down into the twos and whatnot. But the main point is, technically, there is no current urgency to own this stock, right? So we can maybe turn around 12, 18 months from now, which is technically only half of the time that they're going to need to complete construction at Thacker Pass, right? Because they said kind of tail end of 27, it seemed like. So we have time. And that's why I'm saying, my point is that we could maybe turn around 18 months from now and the stock could be right here at this level. So that's why I'm saying, in my opinion, if I had a little bit of excess capital and I had, 5-10% of my capital, in my opinion, positioned in something like LAC, I would probably look to slowly add to the position on big dips like this, try to bring the cost basis down, but again, slowly accumulate shares and build a position over time. But I do feel that there is still time. Currently, in the moment, it doesn't seem like there is urgency to own it right here. However, I will say that if the lowest of the lows, let's say hypothetically, as we looked, is about a point lower than here, then in the short term, you don't have much to lose. But with the stock sub $5, you may have a lot to gain down the road long term. So that's why, again, I understand the offering brought down the stock, but if a lot of you are viewing this as a buying opportunity because the stock is sub $5 again, so you added to the position, in my opinion, I would understand that. I just wanted to look at, again, the Bollinger Bands. You guys know I like to look at the pivot points and whatnot, so I just wanted to point out what could potentially happen. But even if we look at the equity real quick, yeah, see, we can see as of last quarter, equity, we'll call it like 300 million, which again is a little less than half of where we are, which is why, again, I'm saying, in my opinion, the low of the lows could be maybe like 220, maybe 230 a share if they want to. Technically, on paper, they could bring it down there. And as you see, the actual book value of the stock is $1.83. So that's, you understand what I'm trying to relay to you here. That's why I'm saying, of course, again, sell-offs could happen. Lithium prices could start rising, so the stock could start running back up into the 5s and the 6s from this point. However, in my opinion, you have to deal with the short-term volatility for the long-term growth. But overall, I've went on record multiple times that a couple of years down the road, once the construction is actually completed and they actually start mining the lithium, then in my opinion, this stock is going to be off to the races. And I do think that down the road, over the years, I think, again, once we get into 2028, halfway through 28, and they've been mining lithium for a quarter or two, I do personally believe that we're going to be looking at a $17, $18, $20 stock, which again would only be a market cap of, between like 2 and 3 billion, which really isn't that much for what the company is doing and the sector that they're in my opinion. But again, we'll cross that bridge when we get to it because we have like 3 years. But I do know there's a big name in the space, there's a brand name in the space that I know a lot of younger investors are building positions in now so they can possibly take advantage of big growth several years down the road. So that's why when I saw the offering and I saw the stock down big, I figured let's jump on, let's do a quick update video and just kind of bring everyone up to speed. So anytime big news hits on a lot of these stocks we're looking at, you guys know I'll always try to jump on and do a quick update for you. But that's pretty much it. And I'm going to end it there. So once again, stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel, right? And of course, subscribe to the channel. That is our handshake agreement. That's all I ask. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they are volatile, they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day.